So this is a big one.
That was the sound the world heard for almost an hour as President Trump's pen signed one executive order after another right after his inauguration. Welcome to Insight with me, Sherian, where we dive deeper into the stories that matter with crucial context and analysis. The return of the Trump era is already playing out on the markets, with investors latching onto every headline. Asian stocks and U.S. equity futures under pressure after Trump said he will enact tariffs on Canada and Mexico as soon as next month.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
When do you think we would enact those?
I think February 1st.
Investors have been on tenterhooks over the deluge of executive orders from the White House after Trump vowed to quickly implement his America First agenda. And today he signed dozens of them on issues ranging from immigration to TikTok.
Essentially with TikTok, I have the right to either sell it or close it. And we'll make that determination. And we may have to get an approval from China too, I'm not sure. But I'm sure they'll approve it. And if they don't approve it, it would be somewhat of a hostile act, I think. But it's good for China if it gets approved.
The move to put more time on the clock for TikTok showing Trump's shift to a negotiating stance with Beijing, along with holding off the much-touted China tariffs that he threatened on day one. Let's sort through all of this with Elena Patel from the Urban-Brookings Tax Policy Center, who joins us now from Salt Lake City, Utah, and also our Chief North Asia correspondent, Stephen Engel, who's joining us from Hong Kong. Steve, let me start with you, because despite the fact that President Trump mentioned tariffs on Canada and Mexico, his partners and allies, he didn't say anything about China as of yet. What can we take away from day one?
Well, there was a lot of whipsawing back and forth, and the markets reflected that as well, and the dollar reflected that. So when he had that impromptu press conference that we just heard as he was signing those executive orders and just fielding questions left and right from reporters gathered in the room on just about everything, from withdrawing from the World Health Organization to TikTok, which, by the way, he also acknowledged is probably not China's biggest concern right now. We'll talk about TikTok a little bit later, but he did not get into specifics about the biggest tariff threat that took place during his campaign, and that was on China. Upwards of 60%, plus another 10% potentially on China, on all Chinese goods, for the trade imbalance as well as some of those border issues, another 10% on top of that 60 for that. But he did say maybe February 1st, as you rightfully said, Sherry, for tariffs on Canada and Mexico. Now, for China, I think he's moving into more of a negotiation mode. We all know he likes to negotiate, and he did negotiate a first round of a trade deal in the first administration, which sort of fell apart because of the pandemic and other issues. He is now basically, instead of day one imposing those tariffs, or even announcing a staggered approach month by month of tariffs, he's essentially empowered his administration and his agencies to do an investigation into the impact of tariffs, as well as the trade distortion of all trading partners, and essentially also launch an investigation on China's compliance with that first trade deal. So he's buying time for himself to come up with the right tariff policy for China. And also, let's face it, when Chinese leaders woke up in Beijing this morning, they probably got the better part of the news, because they do not necessarily have to have a day one policy response to those tariffs, not only for the impact on the Chinese economy and those policies that are coming down the pike, obviously at the National People's Congress, but how are they going to respond initially, right now, today, to those tariffs? So he is already saying, Donald Trump, he could go to China this year. He has an invitation in hand, and he's going to have calls and meetings with Xi Jinping. So maybe they can kind of work something out. And that was a relief to not only China, but American companies that would have to basically pay those tariffs. So right now, it's on hold. I wouldn't say it's on the back burner, still a front burner issue on tariffs, but we have to wait more time to get the details.
But definitely no relief when it comes to Canada and Mexico, right? Let me bring in Bloomberg Global Economy correspondent Enda Curran now for analysis on what to expect. And given that, of course, we were headed towards a negotiation again of the USMCA, a deal that President Trump in his first term actually wanted to renegotiate from NAFTA. So what are the implications now that we could potentially see 25% tariffs on their goods come February 1st?
Yeah, so like Steve said, a lot of conflicting signals. We had the warning from President Trump tonight in the Oval Office that he may go ahead with 25% tariffs on both Canada and Mexico on February 1st. And that's because he's accusing both nations of not doing enough to control illegal immigration and, of course, control fentanyl. But within the executive order that was issued and signed tonight on trade policy, within that, there is a detailed policy proposal there for a study and a review of how the US trade agreement with Canada and Mexico is playing out, the public consultation, industry consultation and the like, which would suggest it will take some time to be completed. Certainly hard to believe it will be completed before February 1st. So, you know, it's a kind of a conflicting signals, as we say at the start. On the one hand, he's threatening these tariffs on Canada and Mexico within a fortnight. But on the other hand, he signed a document saying, you know, we're going to have this big review into that trade agreement, and one would assume that will take longer than the coming 2 weeks.
Definitely conflicting signals when it comes to TikTok as well, Steve. I mean, given, of course, what we're expecting in terms of being a China hawk, but why this exemption when it comes to TikTok, and what can we expect in the next couple of months?
You know, that impromptu press conference there as he was signing the executive orders kind of gave a little bit of an insight into why he had an about face on TikTok. Obviously, he wanted to lure the younger voters, and he even acknowledged that younger voters don't usually vote Republicans, but they did this time. And he said, I started to use it. So he didn't really have mixed signals on TikTok. He pretty much said, well, I'll read you what he said. TikTok is worthless if I don't approve the executive order. I could see making a deal where the U.S. gets 50% of TikTok, polices it a little bit, maybe a lot, depends on them. And them being the owner of TikTok is ByteDance. So the question now is, as he has signed essentially a 75-day reprieve for ByteDance to find a U.S. either buyer or partner, because he's proposing a 50-50 joint venture. Now, again, the extension, the 75-day extension, and a 50-50 joint venture maybe is not to the letter of the law that was signed in April. And that's something House Speaker Mike Johnson as well as Senate Intelligence Chair Tom Cotton have both said. And remember, members of Trump's party says, look, there has to be complete, full divestiture. That's what the law says. And it also does not necessarily permit a delay, an extension of 75 days, unless there's already a partner and a deal in the works. So this is not fully played out just yet. If this ban on the enforcement of the law can be overturned by Donald Trump completely.
Right. And of course, we continue to watch those executive orders coming out of Washington at the moment, with President Trump just signing one after the other. Right now, the market's just trading on headlines, basically. But when it comes to the economic impact, which ones are you watching closely?
We had a lot of firm details today on immigration, i.e. that the president's going to push ahead with a very hawkish approach on both immigration and deportation. That's a domestic U.S. story, but of course it could impact inflation and the labour market here. Globally, of course, the big ones are, as Stephen mentioned, it's this executive order on trade tonight. There's a lot of detail within that. They're talking about launching an investigation to exchange rate policies of trading partners. They want to get to the bottom of why the U.S. has a trade deficit with some of its trading partners. There's a section in there on reviewing the trade one deal with China and we're seeing whether or not China has been compliant on that. So there's plenty to unpack in the executive order on trade. But I should say, overarching all of it, President Trump today several times referenced this new external revenue service that he wants to set up, which he said will bring in significant funds for the Treasury. Obviously, that's based on tariffs, so he's deadly serious on that. And even though we didn't get specifics on any China measures, certainly all indications are that there will be some trade tariffs coming down the line at some point.
Our global economy correspondent, Enda Curran, and our chief North Asia correspondent, Stephen Engel, there, of course, with that flurry of activity that we're seeing in Washington, D.C. Let's bring in Elena Patel, non-resident senior fellow at the Urban-Brookings Tax Policy Center. Elena, good to have you with us. I mean, right now, we are seeing economists, markets, our own newsroom trying to unpack all of the action and executive orders that we've seen so far, and just the commentary that's coming out from President Trump. What are you watching right now that signals to you what we might expect in the next 4 years, given the priorities of day one?
It's a great question. Thanks for having me on. I have been watching the campaign closely in these coming months, trying to get a sense of what was coming on day one and what we could look forward to in the next 4 years. And I think, like everyone, we've been trying to see in the long list of executive orders what remained the top priority. In the realm of tariffs, there's certainly a lot to be said about this. Economists have written, every day about the damages that can be done by some of the stricter tariff policies that President Trump has proposed. But at the same time, he took a pretty measured approach tonight, and one that, frankly, I'm not super surprised by. There are rules and regulations in place for imposing tariffs that really prevent President Trump from imposing tariffs on day one, except under very, very rarely, if never, use emergency authority. And I would have thought that to be a very strong move and one that would be legally challenged almost immediately. And so I'm not surprised, and I'm glad to see that what he's done is started the process, which is agency review, to determine whether or not there are necessary and appropriate actions that need to be taken by the U.S. government to remediate issues of national security or domestic supply chains. And this takes time. And so even February 1st, as folks were talking about, that is a pretty quick turnaround to engage in these processes. I think we're looking at a number of months before any of this can really come online.
A measured response when it comes to Canada and Mexico as well, if we do in fact get those 25% tariffs on their goods come February 1st, and the implications for different sectors of the economy, including auto manufacturers.
I have the same fears that you do. And I think what strikes me is that February 1st also seems like a rosy deadline. I think that there is agency review that needs to come in place. And I don't think February 1st is acknowledging sort of the frictions that lay in front and the sort of large economic impacts of 25% tariffs on our largest trading partners. And so for now, I try to stay calm and trust the agency processes that they will go through the necessary analysis to determine whether it's legal and appropriate to impose 25% tariffs on our trading partners.
What about the crackdown on border crossings? Of course, we have also seen actions aimed to ending automatic birthright citizenship. I mean, we know the effect that immigration has when it comes to the labor market in the U.S. economy. So if we do see these restrictions on immigration, what will be the outcome for the U.S. economy, but also just more globally as well in labor flows?
I agree that the immediate shutdown of the border flows is going to have labor market impacts in the U.S. I think the markets are watching this, and we've had experience with this before. President Trump has imposed very strict immigration laws in the past, and I think that we have to see how these current regulations are going to play out and the current restrictions. My guess is as good as yours, unfortunately, on that one, where I expected this to happen, and it's unfortunate that this is where we are right now.
The CBO actually says that migration actually reduces the broader deficit. We haven't necessarily seen any clear pictures on tax cuts either. So when it comes to paying for a lot of these measures, where do you expect all of that capital to come from?
It's a good question. I think that the Republicans have a very bleak picture in front of them in terms of trying to adhere to President Trump's priorities in terms of tax and spending. They would like to pass a $5 trillion tax bill, and we are in a fiscal situation in the U.S. where we frankly cannot afford that. I think economists have been telling the world this for the last 5 months as we've been debating what is on the table in terms of renewing or not parts of the Tax Cuts and Jobs Act. And I think that that debate is going to play out over the next 12 months in terms of deciding where the priority is. I think that it is unfair to say to the American people that we can achieve $5 trillion in tax cuts by cutting spending. It's not possible. And so I hope that Congress will start having realistic conversations with everyone about what we can afford and where the priorities are.
Yeah, it seems the focus right now is in cutting spending when it comes to the federal government, with a focus on DOGE, of course, the Department of Government Efficiency. What sort of changes do you expect to see?
Right now, the changes that we've heard, in the last 2 hours of a flurry of executive orders are some of the things that were threatened in the sort of announcement of DOGE and an agency like that. They've been small. I don't think that DOGE is going to succeed in finding the level of savings that they promised to find. The truth is the civilian workforce is a small fraction of the federal budget. That's not where the savings are to be had. And federal workers are an important part of the government enterprise that produces public goods for the American people. So we'll see where DOGE is going to find these savings. I never think it's bad to look for ways to gain efficiency in the government. We already have agencies that do that are focused on that. So it's unfair to say that the federal government has not been focused on this for a long time. We've just created a redundant agency, essentially.
Elena Patel, good to have you with us, and your perspective, non-resident senior fellow at the Urban-Brookings Tax Policy Center. And still ahead, RBC Wealth Management's Jasmine Duan has a watchful, cautious, but invested approach to markets as President Trump begins his second term. More on that next. This is Bloomberg. Asian equity still in the green, but whipsawed a little bit given that President Trump is keeping traders guessing on tariffs, and the dollar also reversing an earlier slump. Avril Hong has been tracking the latest moves for us right now, and welcome to the Trump 2.0 era, right, where we continue to trade on these headlines.
Yeah, I think we just have to get used to this. We've had a practice run before, but essentially what markets really wanted this time around on Inauguration Day was clarity on Trump's economic policies, right? There was optimism that maybe these trade relations wouldn't be as acrimonious, but then he kind of scuppered things by talking about Mexico, Canada levies. So we saw the dollar initially slumping by the most since 2023 and then quickly reversing some of that. And then similar rules, I think, sort of apply when it comes to U.S. Treasuries, that tariff overhang. So despite that relief rally initially, again, that was something that reversed slightly after that. There have those been pointing out that when it comes to Treasuries, the uncertainty over policy is really going to keep traders on their toes when it comes to bonds. So it might be difficult for yields to fall a lot more. And we're seeing, as you mentioned earlier on, that Asia stocks rebound or extension of yesterday's gains, but again, erasing some of what we saw at the open today. Sherry.
All right, Avril Hong there with the broader markets as we continue to see strength in the Japanese yen as well. We're now at the strongest levels in about a month against the U.S. dollar, having broken that 155 level against the greenback. Of course, we have perhaps a little bit of safe haven moves, but also the fact that we do have the Bank of Japan policy decision on Friday, and the expectation right now is for a rate hike. Let's bring in our next guest. Jasmine Duan is Senior Investment Strategist for RBC Wealth Management Asia, joining us now from Hong Kong. Great to have you with us. We are seeing some knee-jerk reactions on the markets, really trading on headlines at this point. What's catching your eye that could potentially be a more sustained move long term?
Right. Currently at RBC Wealth Management, we still have a cautious, constructive view about the stock market prospect, but we are also vigilant about the potential volatility and complexity. And right now, we expect the S&P 500 to rise by around 10% in 2025. But now we are also watching closely on Trump's policies, tariffs, and also the already stretched equity market valuation, and also the potential impact coming from a very high investor sentiment. And today, we are bracing ourselves with a stream of Trump executive orders, and the market is going to take some time to digest and to see what is going to come to us in the next year. But now we want to remind investors that even though the Trump's policy is going to bring some volatility and opportunities to the markets, policies from Washington are not the only determinants of the fate of the U.S. economy and other economies. And also, if we look at the stock market performance in the past, the share price performance may be quite different than what investors have expected. So take the energy sector as an example. The energy sector drastically underperformed when Trump was the president, but it significantly outperformed under Biden. And investors were expecting Trump's policy of easing regulation towards the oil and gas industry is going to help the energy sector to perform. But it turns out that the sector was first hit by the price war within the OPEC plus countries and then by the pandemic. Therefore, we remind investors to bear in mind that,
and then we could potentially also be headed towards a trade war, right, between China and the U.S. Perhaps not immediately right now. We are seeing that upside on Chinese equities. I find it really interesting that you have an overweight call on China equities despite the risks.
Seems that the Trump inauguration is a risk-clearing event for the Chinese equities, and the market is now expecting that the tariffs is not going to come on day one, and investors have priced in the worst-case scenario on tariffs for Chinese equities in the past 2 weeks. But so far, since it's a risk relief event for the Chinese equities. However, we also want to remind investors that Trump likes to surprise the market, and we see many of the concerns from the Chinese equities come from domestic, and therefore we still want to see more policy stimulus coming out in March. And also, we are approaching the Chinese New Year. It is going to be a data vacuum period for us in February. Therefore, at this point of time, while we are still constructive on the Chinese equities outlook, we think there will be more fiscal policies coming out to support the market next year. We are still positioning quite defensively at the moment.
And Jasmine, before we let you go, just quickly, the strength of the Japanese yen, will this continue, or will we sell the news once we get the BOJ rate hike?
For us, we do see a high probability of a BOJ rate hike on Friday, not only because the BOJ governors have signaled that there could be a rate hike on the table, but also because we think it is a good time for the BOJ to go back to the rate normalization path, because right now, according to IMF, the yen is significantly undervalued against the US dollar by 40%. And if the yen remains so weak compared to the US dollar, we may see Japan being the next target for trade restrictions or tariffs.
Sure.
And that could be a big risk for Japan.
We'll be watching that. Jasmine Duan, Senior Investment Strategist at RBC Wealth Management Asia. We have plenty more ahead. This is Bloomberg. We take you live to Washington, D.C., where you can see President Trump and his wife Melania Trump at the Commander-in-Chief inaugural ball. Now, this ball is featuring performances from country music bands. It's geared toward military service members. We earlier saw also J.D. Vance and his wife Usha Vance as well having the first dance there in D.C. Of course, this is one of many celebrations today, given, of course, the victory and inauguration of President Trump in Washington, D.C., and you can see those dances being carried out with military service members. You're watching the celebrations in D.C., of course, with the inauguration of President Trump, as the world also is reacting to his second term. Malaysia's sovereign wealth fund seeing potential upside on the U.S. market as President Trump returns to office despite the threat to its top trading partner, China. Managing Director Amirul Feisal Zahir spoke exclusively to us at the World Economic Forum in Davos.
When you look at the policies, you've got less regulation, you have low tax rates, and I think you want a low energy price as well. Now, that is actually quite interesting because it does show that rates may not come down a lot sooner. I think rates could be there for longer, and therefore you're going to have a strong dollar going forward, at least for this year. Looking at investments, it does seem to say that there's U.S. as a market seems to be a bit more attractive given the growth, and it's we're running a budget deficit about 6 to 7%. So you have a lot of growth opportunity in a strong dollar. So it does look like an interesting market for investments globally, but it does tell you that for the other markets, it's going to be tougher. Now, in Malaysia, we do rely on trade a lot with China. It's the largest trading partner. And I think they're going to be impacted quite a bit, especially if the U.S. imposes additional tariffs. So as we navigate, I think we're still focused on diversifying our portfolio. But here's the backdrop.
You say U.S. is looking attractive. What's looking attractive to you? Is it still a Mag 7 play for you?
From public markets perspective, it is.
It is still Mag 7.
Well, where do you go, right? But having said that, I think we don't just invest in public markets. We do invest in private markets as well. And that's actually quite interesting because, at least the markets will be open for exits. There's more opportunity for consolidation. So these are areas that, there's various asset classes still look interesting in the U.S.
You've been wanting to have greater exposure in international markets versus your domestic market in Malaysia. How are you looking right now? Is there reason to think that your 60-40 ratio would change in any way?
Would like to maintain that, at least in the longer term, 60 to 40. Having said that, we are diversifying. We have been diversifying our portfolio. And we've been moving our portfolio towards the developed markets, particularly the U.S., and still more room for that. And I think that has benefited us in the past, and it's looking the same.
How does diversification look like?
Developed markets, public markets, as well as asset class. But then when you get developed markets, is it Europe, is it US, or is it Japan? And it tends to gravitate to US. Yeah.
And in terms of cryptocurrencies, we just heard from Tom earlier how, it's risen to $109,000. I mean, is that an asset class you might consider given growing institutional interest already in cryptocurrencies, Bitcoin in particular?
Yes, I think if you personally invested in it, you'll be doing quite well. But as a fund, we look at the depth of the market, depth of the currency in terms of the size of it, and I think it's still a way to go. And because of that, you could see more volatility. So we're quite conservative. We are monitoring Bitcoin, cryptocurrencies, or at least the players around it, as an opportunity. But for investment there, I think it will be quite a while before.
Khazanah, Nasional's managing director, speaking exclusively with Bloomberg's Haslinda Amin in Davos. And Haslinda also spoke exclusively with the Philippine Finance Secretary Ralph Recto. He weighed in on the crypto outlook as well. Have a listen.
A lot of Filipinos have already invested in crypto. Something like 6 trillion pesos worth of investments in crypto. Most of these cryptos, I think, that they're being invested in are regulated in the United States right now, right? So we're ensuring that we follow those regulations too.
For more on how the Trump presidency might impact the crypto landscape, we're joined exclusively by Hassan Ahmed, CEO and country director for Singapore at Coinbase, the biggest crypto exchange in the U.S. Hassan, really great to have you with us. We're expecting some sort of executive order when it comes to the crypto landscape. We have yet to get one. Yet, how would you react right now as President Trump takes his second term and the expectations in the space for what he could do?
Thank you for having me. Yes, we are excited, and this is a historic milestone for the industry to turn the page with the new administration that makes crypto a national priority, sets clear rules for the road, and really encourages innovation. Then what we're paying attention to right now are a few different things. One, just from an enforcement agency perspective, there are new appointees, and it's an open secret that there's been a turf war in the past between the SEC and the CFTC on technical definitions. We're expecting that to get ironed out and to be able to provide the industry with greater clarity on what they can expect in order to build and innovate and invest in the space. I think the new element here with this new administration is the Bitcoin Strategic Reserve that's being proposed and talked about both at a federal level. But in addition to that, there are already 8 states with pending bills that want to establish state-level Bitcoin reserves as well. So it's hard to imagine that 18 months ago that any of this would have been feasible or even in the national conversation.
Yeah, Coinbase CEO Brian Armstrong, of course, has just endorsed the idea of that strategic reserve. Why does that matter?
I think overall, it's something that really signals for the U.S. that they are taking this seriously, that they want to establish a long-term beachhead, both from a fiscal policy perspective, but also from an industry and implementation perspective. If you look at other stores of value and assets that have been introduced into the strategic reserve, including gold and oil, Bitcoin is only degrees of logic away from that. And if from a game theory perspective, if the U.S. does want to add that on, it's better that they lead rather than follow.
Our audience is taking a look at live pictures of President Trump right now speaking at the inaugural ball, Commander-in-Chief inaugural ball in D.C. But Hassan, when it comes to bringing more legitimacy and credibility to this asset class, does it concern you that we saw the Trump meme coins, the Melania meme coins as well? There was a lot of criticism about perhaps that not necessarily helping in those legitimization efforts in the industry.
Overall, we're very excited that the president and his affiliates are choosing to participate on-chain in issuing assets. Recall that the president has also issued NFTs in the past as well. And even though the meme coins might have been taken more attention, the president and his family are also directly interacting with decentralized finance as well. So the key message here really is that having administrators and representatives that actually participate in the crypto economy gives them greater clarity on what is the power of this technology and the potential. So we're excited to see where this goes long term.
When it comes to regulatory clarity and the appointees that give you more encouragement about how many different regulations we could get, what will be the priorities for you?
I think long-term, we're excited at the prospect of finally having regulatory clarity in the U.S. that has been holding back not just builders and innovators and capital allocators in the U.S., but worldwide. There is legislation that has already been proposed that will act as a baseline, such as the Lummis Bill and the Stablecoins Payments Act. And we're hopeful that, especially with the House of Representatives, of which 2/3 are pro-crypto, and even in the Senate, there is broad bipartisan support. This is a bill that can really go the distance and then enshrine regulatory clarity into law. Near term, we think that the agencies are also going to be much more pragmatic and stop this regulation by enforcement regime that had really had a chilling effect on the entire industry in the past, as well as the banking system, which had been trying to choke out the crypto industry. So I think all of that is, again, in the past, and we're looking forward to where this is going next for the U.S. and the world over.
Hassan, but that's the thing, right? How does regulatory clarity in the U.S. affect your business, say, in Asia, given that there isn't necessarily a uniform approach worldwide?
Yeah, that's a great question, Sherry. The reality is that this industry and this technology really is geographically agnostic. And some of the key use cases that we are really excited about enabling with blockchain technology is things like cross-border remittances, being able to do more on-chain finance. That's something that can really provide access the world over. So while greater jurisdictional harmonization is something that will really benefit industry participants such as ourselves to do long-term investments, I think even at an individual geography and jurisdictional level, providing at least a baseline so that participants can really start to come on-chain is really, really key for us. We're already seeing a lot of cross-border flows. Stablecoins are at like 200 billion plus total value locked. There's been 5.2 trillion of payments that's been settled, like mostly across the global south. So I think those are all proof points that this technology is something that's maturing really fast, and now it's becoming politically and regulatory feasible to really start scaling up to the next level.
Yeah, we heard of some efforts by Coinbase to get a foothold in Southeast Asia with baht and peso stablecoins. What are some of your growth plans for this year?
In Asia, we're very excited about the long-term potential. Coinbase sees this U.S. clarity as leverage to really accelerate our international expansion plans, even in Asia and Southeast Asia in particular. In Singapore, which serves as our APAC hub, we chose to start with this market and get our license. We've also made many investments in the region already. Coinbase Ventures has about 19 investments in Singapore alone and over 30 across Asia. So when we think about the long-term potential of this region, the fact that there's 2.6 billion internet-connected individuals, 40% of the GDP is over here, 37.1% of global trading volume originates out of Asia, according to a report by Primitive Ventures. We see ourselves as playing a very anchor role in helping to propel this industry forward. As for stablecoins, we're very excited about this theme called on-chain FX, where we help to really bring aboard all the major currencies on-chain. And we're doing that with Base, which is our layer 2 scaling solution on top of Ethereum, and really helping builders around the region to be able to deploy their stablecoin assets on Base.
Given the projects that you're expecting to carry out here in Asia, are you expecting more hiring across Asia Pacific and maybe even the U.S., given, of course, the encouraging signs in that sector?
Absolutely. We're just getting started, and we want to be able to really press the gas this year across all of our markets and all of our products. In Singapore, we announced last year the launch of our developer hub in partnership with the Economic Development Board of Singapore, which allows us to train the next generation of talent of blockchain engineers, not just in Singapore, but we hope to be able to bring them from the region over. So we will be hiring aggressively across product, engineering, design, as well as our commercial functions across our various sites in Asia.
How does your Asia business compare to the U.S., given, of course, that you're so big in America when it comes to resource allocation, but also how much you plan to grow this region?
Yes, we're anchored to the long-term potential and especially the large consumer base, as well as the emerging developer base that's coming out of this region. Singapore has been one of our fastest growing markets in the last 2 years since we launched. We also have a registration in Australia as well, and that's performed very well for us. We have a variety of products and services that span across consumers, institutions, and developers. And at the moment, we are really excited about the potential of Base as well as Coinbase Wallet in many of these populous markets. And so that's where some of our recent efforts have been focused on for this region.
Hassan Ahmed of Coinbase, good to have you with us. Thank you so much for making the time, of course, as we look ahead to Trump policies in a more pro-crypto era. We continue to watch the latest developments in Washington, D.C. But coming up, the Mahindra Group CEO, Anish Shah, telling us why Trump's presidency may have a positive effect on India's economy. Our interview from Davos is next. This is Bloomberg.
Good time, everybody. Say hello to everybody over there. I have a lot of friends in South Korea. And great job. You look really sharp, really special, and you are a special guy. Thank you very much. Thank you. Thank you very much.
We do see some impact of what the Trump administration might do, coming in obviously touching India to some extent. Yes, if US and China, kind of the trade war plays out the way people are predicting, China plus one strategy in terms of India could be benefited. We've not seen that much of benefit come through, but slowly, gradually, you can see some investments are coming in.
Trump is a practical person, so he probably would increase tariffs on countries as leverage for immigration issues, I suppose, or maybe with countries with high deficits, trade deficits. The Philippines is not in that position.
We look forward to working with the second Trump administration, as we have with previous administration, on important work, including addressing some of the challenges the global economy is looking at, such as tepid growth.
Some of our guests in Davos on President Trump's impact on the global economy. Of course, we already saw the impact on the markets with the U.S. dollar rebounding after his comments on potential tariffs on Mexico and Canada. On the other side of the trade, though, the Indian rupee continues to gain ground against the greenback. Take a look at the open, because we are seeing the support for a second consecutive session. When it comes to banks, we're watching those closely because we saw that rally in the previous session in Kotak Mahindra Bank after the third quarter earnings showed lower new bad loans than the previous quarter. We're also watching the broader index with the Nifty gaining ground, materials and healthcare stocks leading those gains. The CEO of the Indian auto giant Mahindra Group says he's optimistic about the impact of President Trump's policies on Indian manufacturers. Speaking to us at the World Economic Forum in Davos, Anish Shah also gave us his outlook for EV growth.
We've seen lots of shocks over the past few years. In the auto business in particular, with semiconductor issues and a bunch of other things, we've gotten to a point where there are a number of unpredictabilities we planned for. And agility in our systems where we can pivot very quickly and be able to find solutions. So this is a reality in life today. There are going to be a lot more unpredictabilities. We don't know where they're going to come from. But that's something we're ready for.
What's your best case, worst case scenario for, Trump's trade war proposals? How will it impact your auto business? You export to the U.S. You have, many other businesses of yours have exposure there, including the IT business. So.
We do, but at heart, from everything we've seen, President Trump will do what's right for the economy, and yes, what's right for the U.S. economy as he's a U.S. president.
Which may not be very right for Indian manufacturers.
We've been in the U.S. for over 25 years in tractors. We manufacture in the U.S. And from that perspective, yes, if there are certain large economies that want us to manufacture there, that's something that we can do well also.
So no Trump
we are the
effect
number
on.
3 market share, number 3 player in tractors in the space that we play in the US. And therefore, we don't see too much of an impact on us. We see greater opportunities, and that's something that we feel we can grow with.
So no Trump effect on Mahindra Group at least?
I would say positive.
Okay, positive. All right. Is this going to be a litmus year for the adoption of electric vehicles in India? In terms of the four-wheeler market or the passenger car market, it's still a very nominal number, less than 5%. But you've got 2 new products out. Many of your competitors have been either introducing products or are keen to launch towards the end of the year. Will this be, the year that we see the growth numbers, zoom?
We will start seeing a big change. I've always mentioned the fact that it starts with product. A consumer has to look at the product and say, wow, I love this, I want this. And that's what's happening with the 2 EVs we launched right now, because they are born electric. They're made for electric, as compared to taking combustion engine models and then modifying them. So from that perspective, we are starting to see that pull coming in from consumers. The range anxiety is handled. The price anxiety is handled as well, because these products are very competitive from a price standpoint. Charging infrastructure is something that will take some time to build, but for the most part, consumers won't need that if you charge at home or in office, because with the range that we have, which is 500 kilometers plus in real life conditions, typically a consumer will need to charge once a week. And that's something that's easy to do at home or in office. We will need charging on highways. And this is where, with the PME Drive scheme, the Ministry of Heavy Industries has been very focused on ensuring that we can build out a network across highways. And as that happens, you'll start seeing much greater adoption of electric vehicles.
So when do we get to 10% of all, auto sales being EV?
We talk about all auto sales. That may take some time, because we'll have to see born electric products come up in every segment.
Correct.
In SUVs, we have them right now.
Not just for M&M, I'm saying across the board.
That's
in
right.
India.
For M&M, I can talk about it as much faster with the products we have.
So when?
In India, it will take longer. For us, we plan to get to at least a 20 to 30% adoption in the next 3 to 5 years.
3 to 5 years. And for India?
For India, as we look across all segments, it will depend on what other automakers come up with, because we don't play in all segments. But my sense is probably a little less than that, but I would still be very optimistic on at least 30% by 2030.
Mahindra Group CEO Anish Shah speaking with Bloomberg's Manako Doshi in Davos. And here are some of the other stories that we're following at the moment. Property firm New World Development says it hasn't been in or started any talks on an overall debt restructuring. In an exchange filing, the company says it's aware of certain market rumors pertaining to discussions on holistic debt restructuring. New World is one of the world's most closely watched property firms due to its high leverage amid a prolonged property downturn. Property developer Genro says its founder Wu Zhongrong has been placed under compulsory measures by Chinese authorities on suspicion of crime. Wu and his wife hold a 46% stake in Genro. However, a company filing to the Shanghai Stock Exchange on Monday confirms he does not hold any management positions. The developer didn't provide any details on the measures or what law Wu is alleged to have broken. Take a look at how Asian currencies are trading at the moment, because we are now seeing a dollar rebound. Of course, we had seen that tumble in the previous session, relief that we haven't seen those China-specific tariffs. But with President Trump mentioning the 25% tariffs on Canada and Mexico, we are seeing that resurgence again. On the other side of the trade, though, the Japanese yen continues to strengthen ahead of a BOJ policy decision. And take a look at how treasuries are trading at the moment, because yields continue to come down. Coming up tomorrow, Federated Hermes senior equity strategist Linda Dussel joins us as we dig into the outlook for stocks with Trump back in the White House. This is Bloomberg.